My name is Jody Samuels, and welcome to the FX Trader's Edge Trade of the Week series on the Forex markets for September 23rd. I'm glad to be back with you again. I hope you've had a very successful last few months trading with all the volatility. Today we're going to talk about the pound yen and the interesting chart pattern that is presenting itself. We will also compare it to the stock market. But before we do, this is just a reminder to sign up for the Elliott Wave course at tradingpostfinancial.com. Enroll today and access the 4 online modules immediately. We will have 2 sessions together where we review the material. There is a promo going on now where if you sign up for the course, you will get 1 month free of the online trading room, a value of $130. So it's not as if you're going to take the course and then be stranded. Every single day we look at the wave counts and come up with trades. There is ongoing live support. It doesn't get any better than that. And I have a dynamite team, Michael and Mick. Both are excellent traders and analysts. So to sign up, please go to tradingpostfinancial.com/Elliott Wave or fxtradersedge.com. And now on to the pound yen. Let's start with the top-down analysis and begin with the weekly pound yen chart that we highlighted back in December of 2007. We see the head and shoulders pattern that targeted the 185 level back then. Well, we finally reached that level. Let's see when and how long it took. We finally reached the target the week of September 5th. You can see a nice 5-wave sequence down to the 185 area. Also, notice that the move wasn't in a straight line, as it never is. When you start learning about the Elliott Wave cycles in the market, you begin to feel that the market moves in waves, and you can then learn to trade those waves or cycles. Now that we reach the target, we can then use our Fibonacci tool to see what kind of a retracement we will have of the last swing move down. So, from the green 4 to the green 5. Before we do that, let's look at a comparison between the S&P and the pound yen. We've looked at this before. You can see the head and shoulders formation in both markets. Notice when the pound yen broke down, so did the S&P. You can also see the equivalent pullback in both the S&P and in the pound yen. Notice that the pound yen reaches its head and shoulders target with the sharp move down in the S&P. With this move down, both are ready to correct. But over the next 2 slides, we will solely focus on the pound yen at this point. We turn to a daily chart and use the Fibonacci tool and measure the distance from the 216 high down to the 184.50 area, and we come up with our typical retracement levels. The first is 38.2% at 196.30. We've already met that target. The next is 20010, or the 50% retracement level. So the question is, will we reach that target, and how do we position ourselves for a move there? Let's look at the hourly chart to find out. On this hourly chart, we see a triangle forming, which is a continuation pattern. It looks like we are completing the D leg, which means that we may have one more move down to complete the E leg before this pattern completes, and we then trade up through the trend line connecting the tops of the triangle. If we place a buy, the stop loss can be put below the 194.90 level, because if it is a triangle, we shouldn't go below that point. However, if we break above the 197.10 level, it's quite possible that we will reach the 50% Fibonacci target around the 200. So watch this pattern and let it be your guide over the next few trading days in the pound yen. This concludes our Trade of the Week series. Again, if you want more information about the Elliott Wave course or the trading room, please send me an email to jody@fxtradersedge.com. Feel free to email me about this pound yen pattern as well. And please be sure to watch it with me this week and trade it. Thanks very much. See you next week. Happy trading.